143. So go ahead and get there.
143, I think.
Dallas, Joseph. Everybody else is here. All right. 143. Page 143. 3-3B. The Crazy Mountain Outfitters. That's who we're looking at today. All right. The instructions say this: Crazy Mountain Outfitters, an outfitter store for fishing tracks, prepared the following unadjusted trial balance at the end of its first year of operations. Now, you've heard me say this before. I'll say it again. The unadjusted trial balance is what? That's where we left off on exam 1. So you have done that. So the journal entries are in throughout the month. They've posted to the ledger. They've taken what's on that ledger and they've created this. Okay? So what you see over here should be exactly what you see in here. Just copy the numbers from there to there, so I wouldn't have to go back and forth doing this thing. So what we're doing today is a test simulation. All right. As far as chapter 3 goes, you'll be looking at this on the test, and you'll have to start from there. You'll be given entries like you see right there. We'll have to journalize the entries. All right. Take what we journalize on the entries, change the balances that need to be changed over here, and create an adjusted trial balance, okay? And the adjusted trial balance is the jumping off point for our financial statements, which is what chapter 4 is all about. All right? So that's where we're headed. We got to go from here to, by the end of the day, an adjusted trial balance. So I'm going to leave that over there. I'm going to kind of do all the entries and all the work over here. We'll make our adjustments over there as we see fit. Now, one thing that I do want to stress before we get in here is this. Not every account up here is going to be adjusted. Okay? So when you get on the exam and cash is sitting up here, cash is not going to be adjusted. Whatever cash is on the unadjusted trial balance is going to be the same thing on the adjusted trial balance. So don't freak out and think, gosh, every one of these has to be adjusted. That's not true. A lot of those aren't going to be adjusted. All right? There are accounts that we're going to use in the adjusting process that you do not see at all on the unadjusted trial balance, and that's okay too. Depreciation expense, it's not here. All right, so I have blanks here so I can add it a little bit later. So don't panic. All right, 2 things not to panic over. Number 1, if all of your accounts aren't adjusted. In other words, if cash is still $11,400 after you do all your adjusting entry, that's okay. They're not all going to change. The other thing is, when you start doing your adjusting entries, if you don't see depreciation expense listed here, don't freak out. You can add it at this point. Okay, it's okay to do that. So don't, those 2 things, don't let those things trip you up. That's perfectly okay. All right, so anybody see anything that's wrong up there? I wrote it down kind of quick, so just make sure that everything looks right. Okay, so here we go. Remember, you got 5 options. So depreciation is always very obvious, so let's just kind of throw that one out. That gets us down to 4. We either have prepaid expense, accrued revenue, accrued expense, or unearned revenue. Those are the 4. Those are our options, okay? So here we go. What we have to be able to do is read through these 5 little statements and figure out which entry we've got to put together and what accounts are affected. All right, so letter A, supplies. When you see supplies, your mind should go where? Asset. Okay, so I know I'm dealing with an asset. So out of those 4, remember we throw depreciation out. Out of those 4, 2 of them deal with assets. It's what? Prepaid expenses or accrued revenue. One of those 2. All right, those are my only options at this point. So what tells me that? Again, I see the word supplies sitting there. And I got to know what? I got to know that's not just a word on a page. It's telling me something. It's telling me what? I'm dealing with assets. All right, so supplies on hand on April 30 were 1,380. So if I put this up here, supplies. This number, 7,200, came from where? All right, it came from the ledger. Going from ledger to unadjusted trial balance. So this came from the ledger. All right, so it would have to be correct if I said this. In the ledger, which is where the T accounts are, supplies has a debit balance of 7,200. How do I know it's debit? It's in the debit column right there. Okay? Well, this is telling me what? Remember when I'm dealing with a prepaid expense, I've got to think a little bit. All right? This says what? Supplies what? On hand, left over, sitting in the supply closet on April 30th were $1,380. Not according to my ledger. Okay? So we have to what? We have to adjust the ledger to match what the supply closet says. Okay? We don't adjust, it's not the opposite. Okay? We make this reflect what's going on in the business. Okay? So this says what? Does this say that I need to recognize supplies expense of $1,380? No, it tells me what? Remember, this is where we have to think a little bit. What this is telling me is that this balance that my ledger right now says is $7,200 should be that. $1,380. Okay? So the question then is this. If it says this right there, and it should be this according to my adjusting data, how do I get there? I got to do what? I got to plug in a credit over here for the difference in these two numbers. Alright? Now my entry, I'll put my entry up over here. This is entry A, and all of these entries, adjusting entries, are done at the end of the accounting period. So the end of this one is April 30th. April 30th, bless you, 2014. What does my entry look like? What have I got to do? I got to put some number out here, right? Where do I get that number? I take 7,200 and what? Subtract 1,380. Okay, and I get 5,820. So one of the things that I need to do in this adjusting entry is credit supplies, the asset supplies, for, what was it, 5,820. So I'm going to credit supplies for 5,820. 5,820. What's the offset? There's a couple ways to think about this. I know I'm dealing with a prepaid expense. Okay? Prepaid expense always debits what? Always debits an expense, always credits an asset. If I know that, then I can just plug this in and say supplies expense. I don't have to get real fancy there. Okay, 5,820. The other way I can think about this is $5,820 worth of supplies that have been what? Used. They don't have value anymore. Right? So I got to do what? I have to recognize that expense because they were used in the month. So the supplies expense goes right there. Okay? Now, don't leave this part out. On this exam, I'm not going to give you T accounts to work through. You got to do them yourself. I'm not going to grade your posting, but you have to post in order to get what? You got to post in order to get these figures correct. Okay? So on the last exam, I gave you the T accounts. It was all nice and neat. On this one, I'm not going to give you the T account, so you'll have to work through that by yourself. I'm going to give myself a little room. Alright, so here's what I did. Supplies, according to this, 7,200. According to my adjustment data, it should have been 1,380. So what did I do? Here's my credit to supply. Just like we posted last time, it's not different just because we're talking about adjusting entries. What I do? I credited supplies, 5,820. So I go over here, supplies is an asset. This is my debit side, this is my credit side. So 5,820 goes there. Now, don't make this mistake. When you go to create your adjusted trial balance, which we'll do in just a little bit, I'll see people do this. They'll take this amount, 5,820, and put it on the adjusted trial balance. Okay? The trial balances are for what? Balances in the account. Okay? It's not for what's over there on the journal entry. We never take a number off of a journal entry and plug it on a trial balance. The trial balance numbers come from where? They always come from the ledger. Okay? So don't, I just don't want you to do that. So don't pull that number there. The other thing we did was what? We got a debit to supplies expense. So I'll create supplies expense over here. Remember, this is one of those. 5,820. This is one of those that if I look over here, here's my expense section. I know that expenses are listed largest to smallest, miscellaneous is always last. I don't see supplies expense, but I don't what? Don't panic. Alright, we just do what? We can still add it at this point. It's okay. Alright? What tells me to add it? The fact that I debited supplies expense over here. So if you see that on an exam, alright, just like this. Alright, supplies on hand, April 30 for $1,380. Don't go over here, get this right. You know, get the correct number, everything looks good. And then get to this part and say, well, I got to use one of these. Here are my options: wages, rent, utilities, or miscellaneous. None of those look good. I'll use miscellaneous. No, what? Supplies expense. Okay? Add it. Feel free to do that. Okay? All right, questions on letter A. It's the last one I'm going to do with you. The next one's you. Got it? Okay, all right. B. Letter B. Fees earned but unbilled on April 30th, were $3,900. All right, so keyword fees earned. Two keywords. Fees earned. Okay? Fees earned directs me where? Revenue. Okay, how do I know that? Because fees earned is a revenue account. Here it is right there. All right? Fees earned, revenue. So I'm thinking here. All right, depreciation is out. It's not mentioned in here. That one's out. Are y'all with me on that? Depreciation is very obvious. Okay, all right, so that one's out. So that leaves me 4 options. Okay? 2 of those have anything to do with revenue. It's either what? It's either unearned revenue or it's accrued revenue. All right, so the question I ask myself now is, have I done the service necessary to get this money? Yes. Okay? Fees what? Earned. It's been earned. All right? So that eliminates what? That eliminates unearned revenue. Okay? So what's left? All this can be is accrued revenue. What I have to know is, once I recognize accrued revenue, I know what? This is April 30th, 2014. Once I recognize accrued revenue, I know I'm going to debit some asset. Okay? And you can go ahead and this will always be this. It's always going to be accounts receivable. Okay? Why? Because I have performed services, someone owes me money, and the asset account that is specifically used when someone owes me money is accounts receivable. Okay? So I'm going to debit accounts receivable over here. My credit's what? Alright, I'm going to credit some revenue account, specifically what? Fees earned. There it says fees earned right there. So fees earned is going to be credited. Now, if I have accrued revenue or accrued expense, I don't have to go to this step over here. Alright, where I have to think, are they giving me this number or this number? You know, what's going on? Accrued revenue, accrued expense, the number in the problem is the number I use up here. Okay, so what it says is fees earned but unbilled April 30th, $3,900. So $3,900 goes right there. Alright, now, don't forget to post that. Accounts receivable. Accounts receivable. Don't leave this step off. This is another mistake that I see a lot in this particular part. You go over here and you do what? Oh, 3,900. Boom, 3,900. You move to the next thing. What did I do wrong? Yeah, we got to start with this number. All right, just like we do in all the other ones. Okay, we didn't do that for supplies expense. Why? It doesn't exist. This is the first time we've heard of it. All right, but you notice what? Supplies. The first number that populates this T account is what? The number that's on the unadjusted trial balance. So don't leave that step out. All right, so I got to go over here. Accounts receivable. I have $72,600 in accounts receivable. It is in the debit column. So $72,600 goes there. So what we're saying is this. When I look at this, I know that someone out there owes me $72,600. Now what? Now somebody owes me more. Okay? I was owed $72,600. I added to that this amount. Okay? So I got to take this debit, and again, this is my debit column. That's my credit. I got to take this $3,900 and plug it in right there. Okay? So my new balance in the accounts receivable account that is going to show up on my adjusted trial balance is $72,600 plus $3,900. There, 76.5. Okay? Yes, sir.
How do we know that like 3,900 isn't like the finishing number, and there wasn't like a credit in between?
Yeah, on accrued revenues, once you recognize accrued revenue, that possibility is not there. On accrued revenue and accrued expense, the number in the problem is always the number. Okay? It's only on prepaid expenses and unearned revenue that you'll have to think through that. Does that answer your question? Okay. All right, so any questions on A and B? We okay? Again, this is my last run through. All right? All right. Letter C. 4:30:14. Depreciation. There it is. We know this one. Depreciation of equipment was estimated to be $3,000 for the year. This is obviously depreciation. The only thing I need to know, and where you might get tripped up a little bit, is I'm always going to debit depreciation expense, and it's always for the amount that's in here, $3,000. The credit is where people miss this one. I see all kinds of things. All right? Don't do this. You never credit the asset, equipment. All right? We're not writing down the value of the equipment. We're recognizing what? We're recognizing depreciation. All right? So this is where I get that funny contra asset accumulated depreciation equipment for $3,000. Okay? It has to be accumulated depreciation. Number one mistake I see right there is the asset equipment is credited. Okay? Don't credit that asset. It's got to be accumulated depreciation, $3,000. Don't forget to post. Alright? First thing I got to post is depreciation expense. I look over here, depreciation expense is not listed. That is not cause for panic. We just do what? Depreciation expense, $3,000. We plug in $3,000 right there. This is the first time we have used depreciation expense. So I'm not going to have a beginning balance over here, and that is perfectly okay. Okay? What we can't do is if we do have a balance over there, we can't miss it. Accumulated depreciation on the equipment. You'll notice over here we don't have that one either. That's okay. We just do what? Create it. Accumulated depreciation on equipment, $3,000 on the credit side. Okay, $3,000 on the credit side. Okay? You got that one? Okay? This is what kind of account? Contra asset. Alright, when we list it on the balance sheet, it is listed in the asset section, not the liability section. That's where you want to put it. It is in the asset section. Okay, so just remember that. Letter D. Unpaid wages accrued on April 30 were $2,475. Okay, so these are wages that have built up, that have been earned in April, but the next paycheck is not happening until May. Alright, so according to GAAP, according to the accrual basis of accounting, I have to recognize that expense. I have to match it with when the revenue was earned. Okay? So I have to get this expense in April. So letter D, April 30, 2014. What have I got here? All right, the word here is wages. Wages is telling me something. What's wages? Well, I do have wages over here. It's an expense. Okay? So I know an expense is going to be involved here. All right? The other word that's telling me something is accrued. Okay? So if I have an expense, and I have the word accrued sitting there, I have what? Accrued expense. All right, so the question now, I've identified out of the four, I have to think about a little bit. I've identified which one. Anytime I have an accrued expense, I always debit an expense and I always credit a liability. I'm recognizing that I owe the money, I just haven't paid it yet. Okay? So what we're going to do, since this is wages expense, I'm going to debit wages expense. The amount here is $2,475. My credit's going to be what? Wages payable. Okay? Wages payable. Now on this one, if you come over here and picked up accounts payable, I wouldn't get too mad about that. If this was intermediate, I would, but here, I wouldn't get too fired up about it. I'm looking for what? Are you using a liability here? Okay? Wages payable is the more precise answer. So if you're into that, then wages payable is where you want to go. Accounts payable, again, I would let that one slide. It's not technically correct, but it is a liability. So I can live with it. Again, don't forget to post wages expense. What's step one when you post? Always look over here, all right, and pick up that balance. Wages expense does appear on this unadjusted trial balance. There it is. It's $157,800. So when I create this T account, I've got to take this $157,800 on the debit side. That's my starting point. Then I add in, I got to debit to $2,475 over there. Okay, and my new balance is going to be that. Is that right? Gentlemen, guys, good? What else have I got to do?
Wages payable.
Got to credit wages payable. All right. So wages payable is not over here. No problem. Wages payable, I've got a credit. $2,475. And that's that. All right, accrued expense. We okay? Got it? Questions? All right, last one. Don't do this on the exam, but there's only one. This one gives you all five. Okay? So don't sit here and go, oh, no, the other one said this has to be this, earned revenue. Think through it. Make sure you can process by the words that you're reading that's what it is. Okay? So here we go. The balance in unearned fees. Okay? So unearned fees, that's a key word. You got to know it's a key word. Okay? Unearned fees is what? Here it is. Unearned fees is a liability. Don't fall into the trap where you see the word fees and you're like, oh, that's revenue. No, it's unearned fees. I owe something, right? Okay? So unearned fees, when you see that, you're dealing with a liability. All right? So liabilities, we can eliminate depreciation right off the bat. What else can we eliminate? Prepaid expenses are out. Okay? Prepaid expenses is not an option. There's one other thing we can eliminate just because it doesn't have a liability in it. What is it? Accrued revenue. That's out. Okay? So this is either an accrued expense or unearned revenue. It's one of those two. When you see the word unearned fees, you know what? Alright, you can eliminate the other one. Alright, so we're dealing with unearned revenue. Anytime I have unearned revenue, I know the general form of this entry. I'm always going to debit a liability. I'm always going to credit revenue. Okay? So here we go. It says the balance in unearned fees represented. So the balance in unearned fees. So this, you with me? 19,200. All right. So if I did this over here, let me do this here. Unearned fees. The balance that we're looking at, 19,200. Okay. Here's what it is. It represents the April 1st receipt in advance for services to be provided. So somebody is paying me up front. I've got to provide the service. Out of this, remember I got a $19,200 check. The only thing I did throughout April was $14,140 worth. Okay? So, when we're dealing with unearned revenues, Keaton, this is where we got to think. This is one of the two where we got to think a little bit. All right? Are they giving me the bottom line, or are they giving me the number that goes right here in the journal entry? Okay? What are they saying here? They're saying out of this 19,200, I did what? I did 14,140 of it. Okay? So they're not saying the balance down here should be this. They're saying what here? This is what you have done. So you no longer owe 19,200. You owe 19,200 minus 14,140. Okay? And that is what the liability account unearned fees is going to be debited for. Unearned fees, 14,140. Now my balance over here, I no longer owe. Somebody handed me a check for 19,200. I did $14,140 worth of the stuff. Now I owe what? Now I owe $5,060. Okay? Hopefully, in the next month, we'll get this taken care of. And the next month we'll do what? We'll debit unearned fees for $5,060. Credit. It's no longer unearned revenue. Now it's what? Earned revenue. Okay? So I can credit fees earned. I can credit fees earned. Did I skip fees earned earlier? I did. All right. For $14,140. All right. So I already posted this. Kind of, right there. I've got to post my fees earned, and I forgot fees earned earlier. I left this one off, so don't do that. On the exam. All right. Do the fees earned. Fees earned has a beginning balance, 3,058. And I have a credit to fees earned here, 3,900. So I'll have to include that. Somebody start adding this if you're already there. 14,140. Got it? All right, 323,840. Okay, 323,840. Here's my balance and fees there. Okay, so here's my question. We've got all 5 of our adjusting entries done. Okay, we can handle those. Okay, all right. Can we get from here to here? Is there a number up here where you're sitting there going, "What in the world is this idiot doing? Where is this number coming? Are we okay?" We're good. Promise. Yes. Do it.
On the last one, you didn't put the 5,060.
Yeah, this is where I have to be. This is one of those I have to be careful on. Okay. So as soon as you recognize unearned revenue, or prepaid expense, you got to think, okay, what number are they giving me? All right, so you got to sort of read a little bit and think about what they're saying. All right, it says the balance in unearned fees represented April 1. That's that, right? Okay, so somebody did what? Let's say this. I hand you $19,200, and I say, send me on this fishing expedition, right? Okay, so I hand you the money. You owe me what? You owe me the fishing trip. Okay, so what happens is this is what it says. It says only. This is the second sentence. Only $14,140 of the services was what? Provided. Okay, so out of this, I handed you a check for $19,200. You did $14,140 of it, which means what? That's money that was unearned that's now earned, and you still owe me what? $5,060. Okay, so what this would look like if it were the other way is it would say, the second sentence would say, only $5,060 is still unearned. You see what I'm saying? So that, if it's still unearned, then that means what?